Do you think that because you have sort of put all of this out there, now we understand the conversation behind the decision, that you don't need a press conference to announce a rate increase? Should we expect it in October? The reason why I mentioned October is because it's not expected that you will have a press conference in October. So that leads me to think, okay, then the rate hike comes in December when you're planning a press conference.
No, we could always have a press briefing if there's a major decision.
Okay.
So I don't think that's an issue at all.
I got you. So any month is on the table.
That was San Francisco Fed President and FOMC voting member John Williams on Sunday Morning Futures with Maria Bartiromo. But even with the improvement in the labor market, Fed Chair Janet Yellen said last week the housing market's distressed. Depressed is more the word I should be using. Joining us now is Jeff Taylor of Digital Risk, who analyzes all those words.
Good morning.
So what did you make of what Janet Yellen had to say about the housing market?
I know we said about the housing market has sort of been it's the same old, sort of same old. You look at interest rates. I know. So look right now. Honestly, I was really hoping she was going to raise interest rates. So people are like, what's going to really get the housing market, the purchase market going? And that's going to take one thing: a raise in interest rates, so banks actually start to potentially loosen their guidelines a little bit to open it up to more borrowers on the housing market.
Okay, so that's contrary to what one would think, right? So raising interest rates is going to help the housing market. So you're actually hoping for a hike sooner than later.
Well, it's not contrary. In the refi market for the last 5 years, everybody has refi pretty much has. So what's going to take people to get off the bubble? They're going to have to say, oh my God, those interest rates that's supposed to be moving for the last 3 years that haven't. It moved up. Maybe I really should think about buying versus renting. So actually, I think it makes a lot of sense from a buyer's perspective and from a lender's perspective. If they have more yield in the asset class, they're more likely to make a loan to a good borrower than the perfect borrower, which is a box they've been living in.
I want to come back to Yellen's point that the housing market is depressed. She said it's depressed. What are you seeing? Are you seeing a housing market that's depressed?
I'm not. I mean, look, existing home sales are at the highest point since the last 8 years right now. All the indicators in the housing market are at 4, 5, 6-year highs. I don't see it being depressed at all.
So how worried should we be that the Fed chair doesn't see the same housing market that you're seeing?
Again, I think that she's probably maybe speaking in some specific areas. I'll look nationally. Again, look at areas like Miami, San Francisco. They've been on fire for the last 4 years. Like nationally, it's very stable. So I think from a depressed, I just look at it a little bit different. To get buyers back into the market, actually, I think it's going to take an interest rate.
How far are we in some of these markets from getting overheated again?
You know, it's always like it takes water seeks its own level. So I look at places like Miami, which has continuously to go up for the last 4 years, but 62% of those purchases are cash. So what does overheated mean?
Nice. It was hedge funds being an owner of a Miami property. It was a lot of hedge funds.
It's a lot of international money.
And it was Russians until the collapse in oil prices, and to a lesser extent some Chinese buyers.
But you know what's interesting? That price point, that stat's good for price points from $250,000 all the way to $5 million. So you're talking about across the spectrum. So it's individuals maybe moving from the northeast down, which has been a big move the last couple of years. Yeah. And you're right on the international side. So again, I'm not that worried about the markets getting overheated, but again, to get people off that whole rental market where they know they're paying 25% more on a monthly basis maybe than they could be owning a house, it's going to take something.
And just really quickly, I can tell you that in areas where there hasn't been wage growth, big cities, you had a rapid ascent in prices. But in areas across the country where you have had very weak wage growth, that home prices have moved in accordance with that. And
they're having bidding wars in Detroit right now, in Detroit suburbs.
Because that was so cheap, though. That was incredibly. These are still very cheap properties, but you haven't had a pickup in home prices in a lot of regions in this country.
But sometimes it's counterintuitive, right? What's going to take someone to get off the seat? If somebody's been telling you for 5 years this is the best time in the world to buy a house because interest rates are so low, sometimes you need that first step up to actually say.
Dahl was here earlier saying he's bullish on the housing market and bullish on the housing stocks. So, all right, Jeff Taylor, thank you for being here.
Thank you for having me. Great seeing you.